Hi, it is I, Dennis Hudson at orangequant.com, and today is Thursday, May 27th, 2010. It's about 15 minutes before the close, and I just wanted to share with you something, especially for newbies, a little tool that sometimes you can use to advantage, and it's out of technical analysis. Those of you who are old hands are probably well familiar with this. Notice how the SPY is moving up here, and this is a 15-minute chart. And by the way, I also got out of my SPY 117 June calls for a two-bagger, and I got out back around right here. About two of those candles ago, and I'm going to explain why in a moment. But you see the interest. First I want to cover this for any newbies who don't know about this. You see those two trend lines there, and you see where they intersect. Where they actually intersect is on this candle coming up. So I expect this. Yeah. Well, let me see. Yeah, it's that candle. So this candle could be a bit of a screamer up. It could be quite a skyscraper. I'm going to pause this and let's see what happens. Oh, what we're talking about is the intersect of those two trend lines like that, which tells you some kind of inflection is coming out there. I'm expecting a northbound inflection, so let's see if I was right. But I wasn't willing to gamble my SPY calls on that, and I'll get into that, why I got out of the SPY calls after a bit. Okay, she's trying. She's really trying, but can't quite break up northbound yet. We'll see how that goes. Okay, now she appears like she might make a run for the gold here. Now you want to bring up that last forecast. It was the weekly chart, because I'm going to talk about that in a bit. I don't know if you copy that from the video so you can look at it. That's what you should be doing, is making a copy of it so you can keep track. It's trying to break up through 110.30. Well, it's getting there. Here we go. Yeah. Making the move. And note that the clock is running down. We've got about 7.5 minutes left on the clock down at the bottom there. Okay, I haven't been talking, I've been pausing and clicking this. That's why you see the time moving so fast down below. Nothing to really talk about except to watch how this happens on that inflection like that. By the way, you're looking at a Worden stock chart, freestockcharts.com, and great folks. In fact, they just sent me an email saying they now cover pink sheets, so you might want to go take a look at them. The sign up is free. You don't have to sign up, in fact. Use an email that you can block any spam that might come your way, but if you do sign up, then you can set up a portfolio. And there she goes. 3.5 minutes left on the clock. Oh, now that's really hurting my feelers. I'm going to show you what the difference would have been on my option contracts. Okay, I bought it 12 a couple days ago and I sold it 24, and you can see the bid is now 31. Yes, my feelers are hurt, but I just wasn't willing to gamble on this. Okay, 45 seconds to go. I can see 111 coming. And ding, ding, ding. Okay. 110.79 or so is what it hit. And as I told you, I sold at 24, and the bid went all the way to 31. Let's see what it ended up at. 31. Okay. So I left about 25% of my potential gain on the table. I like to hit them right at the top, so you know how I feel about that. So I would have had a 2.5 bagger instead of just a 2 bagger, but trust me, I'm happy with the 2 bagger. Now let me show you why I made the move that I did. Okay, you remember a couple days ago when I jumped into these SPY contracts, the calls, I said that I was looking for an 8 bagger. That was based on the idea that it would break through these lower synthetics and get on up to the upper synthetics around 115. It had great trouble getting through 110, and so I began to kind of lose my nerve on that. Plus, it had a lot of leg room. I mean, it had a lot of showed a lot of leg room down below, and I was concerned that that candle for the week would shrink. The close would be lower than that, and that can still happen. And in a minute, I'm going to talk about what might be coming here. On the daily, which is what I want to show you. Okay, here's the daily chart. I was looking at it and saying, okay, resistance is right around 111, which would be this candle here that I'm hovering over off to the left, and that's about where it stopped today. I knew that was possible, but again, it would have been risky, so I did bail out on that. Now your next significant resistance is, as you can see, around 112.50 to about 113 or so, and even at that, you know, I might have made a bit more on the contract, but I would, if it didn't get there and the contract kind of imploded tomorrow, Friday, then next week, you know, the following week, even though it would run back to 112.50, which you can see from the weekly chart, that's about what it could hit next week, is about 112 or so. Even at that, it was just wisdom to me to get on down the road, take my money, and run. So a kind of snapshot forecast for tomorrow. I expect it to retest this high from today and possibly again break on through to the 112 area. Next week, again, 112, 112.50, 113 is kind of what we're looking at for it to go to, maybe around there. I am no longer counting on this to break through and go up to those upper trend lines. And if it does at any point, you can see what's going to happen. It's going to immediately start coming back down towards that inflection. Now, if you want more precision, you want to micromanage this, you got to get the FLIR 2 ebook so that you can run the daily chart with synthetics and H205, which is how I planned this entire trade. One trade, and you know, you can pay for that many times over. You know, it's $29.95, and you'll have a lot more confidence in how you trade. After all, I jumped in down there at 104.50 on those contracts because I knew they'd go up, or believed they would go up, and they did. So from 104.50 all the way up to about 110.30 or so is where I ran it, because I could see from the